Hi, Nikita Burdick with Prosperity Lending, and I want to talk about inflation. What is inflation? Inflation is the increase in prices of goods over time. With a lot of things that have been happening in the market, such as the Federal Reserve buying billions of dollars of mortgage-backed securities, or the UMBS, over the past couple years during COVID time, and also the increase in the housing demand, created this period of inflation. Now, there are two major sources of inflation, measures of inflation, would be the CPI, the Consumer Price Index, and then the PCE, which is the Personal Consumption Expenditure. Now, the Federal Reserve favors the PCE, and that's because the PCE is more impacted by their monetary policies. We'll get into a little bit of why that's the case in just a second. So both of these reports will report based on the previous months. So when it's released, like the one that was just released in September, it's reporting the August numbers. The CPI was released just on the 12th, or just yesterday actually. And the CPI number was higher, and that was September 13th, 2022, for those of you watching this video. That was higher than they thought it was going to be. So there's a lot of speculation that there is going to be another 75 basis point hike by the Federal Reserve because inflation actually increased rather than decreased. Okay, now let's get back to it. The inflation number is, when it says year over year, what that means is it's calculating on a 12-month rolling basis. So if you have the inflation number from, December, January, February, March, April, May, June, July, August, September, it is calculating that number year over year or month to month, and that's why it's called the year over year number. Now, within the inflation numbers itself, you have two measures. You have the headline inflation, which is overall inflation, and then you have the core inflation, which strips out volatile food and energy prices. So what the Fed likes to look at is they like to look at the core PCE number, because this is even more susceptible to Federal Reserve monetary policy, because we're stripping out the food and the energy prices that are more volatile, something that they can't control. And then also the PCE allows for substitutions. So the PCE is going to, say if there's a substitution for gas, for example, it's going to allow for that. So that also helps when reacting to Fed monetary policy. The CPI has a large emphasis on housing and out-of-pocket medical expenses, which when we're looking at inflation, and when NBS Highway, which I watch a lot, is looking at inflation, they like the PCI number better, because, the CPI number, the CPI number better, because that is going to be more day-to-day what you and I is costing us. Our out-of-pocket medical expenses, our housing, what does it cost to put a roof over our heads? The PCE is going to look more at Medicare and Medicaid, which is impacted by the government, which again is something more that the Federal Reserve can impact with their monetary policies. So these two numbers are going to differ when they come out. And the Federal Reserve is going to favor that PCE number. So when we're looking at inflation and how it affects the mortgage prices, these are the reports we look at. There is one more report called the PPI, which is more of a producer's report, and it's not given much notice or respect. And the main reason it's not is because it is dealing with more wholesale and producer inflationary measures, and that doesn't affect necessarily directly the consumer. So it's not looked at as much as the CPI and the PCE is. Now, the next thing to look at is, why do we care about inflation? Well, inflation is the arch enemy to bonds. So when there's inflation and prices are high, it's going to have an inverse relationship. We're going to see rates get worse. And this is going to cause mortgage rates to get worse. As we've seen, mortgage rates on average are around 6%, and that's going to cause a huge strain. So what we do is we check how these inflations have an impact on the bond market, and they all work together, and these are some of the reports we look at.